Welcome back, everyone. Update on my H1 high-low trades today. Let's see if my highlights working. Good. Okay. So if you remember yesterday, we took this short from the high and a long from the low. So we were hedged at the end of yesterday, and then this morning we came off the high in at London Open and took this short here. So at this point we had two shorts and one long. Then price came down and we had another long here. If you got triggered into that one at this point, this long had stopped out and I TP'd short 1 and short 2. And then you can see we have this reverse trade here. We've made a low, price has gone long and then reversed. So took this short here and our second long has stopped out, and depending whether you trade right up to the end of the day or not, you could possibly be holding a hedge here as well. So we need to let tomorrow play out. Just want to talk a little bit about exits. In this instance, my exit wasn't the most profitable. A more profitable one would have been deciding at this pin bar, using some judgment there to exit, and then when you took this long, you could have, instead of taking the hedge, you could have closed that out for a small loss, and likewise, you could have held this one until this up bar or to the end of the day, whatever. When it comes to the exits, this is the part that's important. What we've got is a way of giving us a constant flow of opportunities to make money, and the way we exit decides how much money we make, and I believe that's best learnt with some judgment. Remember that with that judgment you have to have a belief system as well. So your belief might be in support and resistance, it might be in candle price action from candles, it might be in average daily range or something like that, and all of these can work, but at the same time you need to be monitoring your data to see what sort of risk to reward you're generating over a series of trades. So say 100 trades is a good number to check on, and then have a look at your data, monitor how good your decisions are, and then adjust accordingly. If you're sort of consistently making too small risk to reward, then your exit decisions are probably coming too early. Okay, if that's backed up with a high win rate, then that's okay. So what I'm really trying to say is I don't think that you can sort of box it in with hard and fast rules, because that doesn't account for how the market might be moving, how you're currently doing, whether you've had a period of losing money and you need to recoup some of that drawdown. All of these things need to be sort of taken into account, and you kind of get a feel for it. And I feel in the long run, if you become an experienced trader and you get skilled at making these judgment calls, then you will do better than if you have a hard and fast rule. Say at 60 pips I'll take profit. If you want to manage a trade at a certain amount of pips, that's different, because you're still giving your trades opportunity for big wins, and that's what I always look for, is that I protect my my risk as much as possible. But if the market really does move, I stand a good chance of being involved in them as well. For me, holding for 2 trades is a really good way of doing that. Today could have dropped hard on GU again, and I would have had a very nice win. and I just kind of accept that it's not always going to be the best exit. You don't know what's going to happen next, and you kind of have to accept that that's going to be the scenario some of the time. So ultimately what I'm trying to say is you kind of need to build your own method for making those judgment calls on exit, and then with trial and error, look at your data, see how well you're doing, and then make adjustments based on that. So that's pretty much it for the high-low today. Someone did ask about this, when you start the week on H4, how does that work out? And so when the week starts on H4, we don't have like the Asian session to sort of generate a range. So essentially the first bar is going to be the high of the week and the low of the week. So really your first trade, you just have to go on the breakout. So this week our first bar was a close up and we break out on the next bar. So you'd have to take that long as the low of the week. Okay, then you can see we make a high of the week and then you take a short there, right? Our long has stopped out now and we would still be in our short. That's kind of the best you can do. Something you might like to do is wait for price to make a swing point first, if that's a bit clearer for you. For me, the start of the week wasn't really a problem. You just kind of have to dive in with both feet, really. And at the same time, it's not the end of the world if you just kind of, if you're not happy how the week has opened up. There's nothing wrong with just waiting one more bar, okay, and then making your making your decision. So that's the start of the week on H4. I also had a question about how to trade on daily bars, okay, and so on daily you're looking for, this is a daily chart now of the pound dollar. On daily you're looking for to secure the high and low of the month, and essentially exactly the same as H4. You're going to take the first breakout of the month, okay, short here, and then you take the first low, and then you've got a defined range to operate in. Now beyond that, if you want to add in the reverse trades, you can do so. Here you would have had a reverse short, okay, then a reverse long, and then a reverse short again, okay. These two small trades would have stopped out, and then price breakdown and stop this short out as well. So at the end of the month you're holding two shorts and you've taken 3 losses. Through until the next month you would have gone short here, possibly a long there if your pending was a bit tighter, and then a short here. So again you've taken these 2 losses and price is broken down, and then at this point you might have chose to manage your 3 shorts, or just take the long and then the reverse trade here, and it's broken down again, at which point you'd have 4 shorts, okay. So that's how you play out the daily. It's really a question of whether you want to take the reverse trades as well, and how you want to sort of manage those. Again, you don't have to stack the trades like this. You can just try and trade from high to low, and manage them that way as well. I think really if you're going to trade the daily, you can pick a small group of pairs and perhaps add a bit more fundamental analysis into it, and if you're kind of more inclined for looking at the fundamentals, then daily would probably be a good choice, and pick 4 pairs and hopefully get a nice trend on one or maybe more of those pairs for the year. Me personally, that's probably how I'd play it, and look to sort of stack longer stacks of trades. Again, that brings different psychological pressures, and it's not suited to everyone. Cool. So that sort of sums up today, and I'll be back tomorrow doing some more H1. Any questions or comments, leave them below.